Hello students, this video lecture is an initiative taken by Shet Vidya Mandir Junior College of Commerce and Science. In today's video lecture, we will see fixed capital and factors affecting the requirement of fixed capital. Basically, fixed capital means that portion or that part of raised capital which we invest in buying of fixed assets or in purchasing of fixed assets. Students, you might know that in every business the owner purchases the fixed assets for long-term use. That is, they purchase the assets like machinery, land and building and various equipments as per the business requirement, and they use it for a long purpose. They are not resold. Once they are outdated, they are been sold in a scrap and a new machine is been purchased. In initial stage of every business or firm, the entrepreneur, the owner or the finance manager has to list out the requirement of the fixed assets. They have to do a good homework on the cost of each fixed asset, as once the total cost of all fixed asset is known, the firm can decide the amount to be invested in those fixed assets, and as per they can raise the capital through equity shares or debentures or any other instruments of capital market. Students, the amount requirement for a fixed capital differs from business to business, and there are many factors to be considered while calculating the amount to be invested in fixed assets. For example, big firms requires huge amount of fixed capital investment, and small firms requires small amount of capital to be invested in fixed assets. Likewise, there are many more factors which we will see in today's video lecture. As there are 12 points given in your textbook, I will be discussing the main 8 points in today's lecture. In these 8 points, we will see how the factors affects the requirement of capital. Some organizations or industries may require less capital, some may require more capital, and that depends on these factors. Our first point is nature of business. Requirement of fixed capital for fixed assets varies from nature to nature of a firm. If a nature of firm is manufacturing in nature or it is involved in any public utilities, this type of firm requires huge capital to be invested in their fixed assets. As manufacturing companies, they required big machineries and updated technology machineries to perform their production activity. In the same manner, industries involved in public utilities requires huge capital, as public utility is about the railways and roadways which are provided by them. So, to create and also to maintain these roads and railways, the firm requires huge capital for their fixed assets. Firms whose activities are related to packaging and reselling, like trading firms, they required comparatively less amount to invest in their fixed capital. Next point, size of business. As I said before, the requirement of fixed capital also depends on the size of the firm. Big firms requires huge capital and small firms requires less capital for their fixed assets. As big and large firms have many departments and processings, to operate their overall business smoothly, they required updated fixed assets like machineries and equipments. And small firms, they required the basic fixed assets which is required in every business, like land and building, small equipments like lightings, air conditioners, fan, etc. Next point is scope of business. Scope of business also means the range of the business operations and the opportunities of the business operations for a firm. For example, Coca-Cola Company. This company has a wide range of products. Coca-Cola has products like Sprite, Coca-Cola, Thumbs Up, Fanta, etc. So, to make the products available in the market, they required comparatively more capital for the production and the distribution of these products. Our next point is extent of lease or rent. Students, at initial stage, many of the firms may require their fixed assets on rental basis or lease basis. That is, they won't purchase the actual assets. In this way, the firm does not require big amount of capital for fixed asset investments. Our next point is arrangement of subcontract. Students, some of the firms may enter into subcontract for the production unit of their firm. So, they don't need much capital for investing in buying heavy machineries for production activity, and hence less amount of funds for fixed assets will be required for this business. Our next point is acquisition of assets at concessional rate. In order to promote industrialization and to motivate entrepreneurs, government has created many programs which fulfills and supports the entrepreneurs and industrialists at the initial stage, especially in buying fixed assets required for the company or the firm. In many cases, government has also provided land and building at concessional rate. So, such firms requires less capital for their fixed assets. Loan facility and installment facility has also reduced the requirement of fixed capital. Our next point is competitive factor. This is one of the important factors which affects the fixed capital requirement. I would like to explain this factor by giving an example. Suppose there are two companies, company A and company B, and they have a similar line of product. If company A updates the production activity by purchasing new tech machinery, company B as a competitor will also try to purchase a more better machinery than company A, for which they will require a good capital, and hence the requirement of fixed capital may change due to the competition factor. Our next point is population trend. Students, in making decisions for the requirement of fixed capital, we should also consider the population factor, as the rise in population will also lead to rise in demand for many type of consumable goods. And to meet this huge demand, the firm has an opportunity to increase their sales and turnovers, and in doing so, they have to produce at large scale. For large scale production, they may also require number of machineries, which will also lead their firm to an expansion. And for all, they will require large amount of fixed capital. You can also see the examples given in your textbook, like automobile industry, electronic goods manufacturing industry, ready-made garments, etc.